I'd like to introduce James Henry from SumUp. Welcome. Before we start with the questions, maybe you just want to say a few words about SumUp and your views on the development of mPOS.
Sure. No, thank you very much for having me. So I'm James. I run sales and partnerships at SumUp. We're predominantly based out of Europe, but now operating in 3 different continents. What do? Well, essentially, we're a financial technology provider that is a licensed payment institute, and our focus is that missing out sector that Windsor identified earlier, which is the long tail, the small businesses. So we provide a series of software, hardware solutions, like my mPOS reader here, alongside payment facilitation to empower those small businesses to be able to accept cards. So allowing them to grow their businesses with card acceptance and essentially focus on the things they love doing every day while accepting more revenue via card.
Are you offering software as well as payments?
Yeah, in terms of software, we work with our own free app that's available to our long-tail merchants. We also provide a point-of-sale bookkeeping solution in-house. And obviously, one of the most important channels we have is working with ISVs as well. So we also have over 300 integrations with gentlemen like Alex, bookkeeping softwares across a range of verticals, be it hospitality, retail, through to pickup and delivery, in which we have integrated payments with software providers.
Okay, thank you. So as we talk, if you've got something to say, just jump in and shout. But I do have a question for Alex, which is, you've raised $72 million? Yes. I mean, that's a big number. I used to work in the retail software industry. What are you going to spend that money on?
I get asked that a lot. That was actually just our Series D round. So we raised 117 million total. And so for us, it's market expansion. So when we did our last round, Omer's Ventures said, if you guys are just focused on being a large Canadian player, we're not interested. But if you want to become a large global player, then we're prepared to fund you. So that it's mostly for expansion to new markets. We're doing really well, both domestically and in the United States. Half of all restaurants that open in Toronto actually open with TouchBistro. So if we can take that success to other jurisdictions, then we'll be successful.
And the payment facilitation model that you talked about with Chase, is that live now?
Yes, that's live in market right now.
You confused us, there was Latin on the slide there. So
I'm sorry?
There was Latin on the slide, so I wondered whether it was
no, that is live right now, and it's U.S. only though. It's only it's not in Canada. It's not in Mexico. But and again, it's not for everyone. We will still continue to have a partnership model because some merchants want to control that experience themselves. They want to negotiate the rate. They want to do that, and that's fine. And that's good for them. But for some of the smaller ones or the ones that just want to talk to one person, then we will have our own solution or partner with someone to create a white label.
No, but what was interesting was Reinhardt from Gastrofix in the session before was saying he felt the small businesses increasingly wanted to buy best of breed, right, which is traditionally what enterprise merchants used to do. So is that something that you're seeing as well? Or do your customers generally want a one-stop shop?
Well, our philosophy is optionality. So for those that, and again, this came out of a long journey, as we said before. When we started, we just had a referral model where they did want best of breed or they want to negotiate their own rates. And we will always have some of the larger, like we have some lighthouse accounts that do over $10, $20 million a year, their own merchant processing, and they want to have the direct relationship with the acquirer. And that's fine, but we're seeing all kinds, and we believe in letting the merchant choose.
Okay, and Mathias, can I just go back to caching? I was interested. You described yourself as Einzettel on steroids, which is a payment business, but when you describe your architecture, you look like an enterprise software business. I wonder how you measure those two.
Yeah,
two
and
things.
also, as Alex said, since we focus on the enterprise segment, we have to be agnostic, and we don't focus at all at restaurants, which is a much more fragmented industry. As we heard today, 100 largest retailers, 50% of transactions. So we go for the bigger ones, and therefore we have decided to do this agnostic. Yeah.
Okay. Windsor, congratulations for getting your statistics into other people's presentations.
I was very pleased about that. Thank you, Geoff.
That was very good. Question I've always wanted to ask, though, is where do you get your numbers from? When it says source Juniper 150 million units or whatever, where does that information come from?
Okay, essentially, to begin with, for certain key performance indicators, the providers will dish out, if you like, various numbers. Now, if you're looking at, if you go back all the way up the pyramid to the mobile network operator numbers, they give these things out on a quarterly basis and very detailed. But what you then find further down the line, it becomes detective work. So you are finding lots and lots of ad hoc data points, which you then try and validate by a combination of consumer surveys and by speaking to people in the industry, and in some cases ringing them up and saying, this is what I'm going to put it down as, and if they squeal, then you change it. So it varies, but it is a process that I have likened to detective work, because you are constantly looking for national, regional and global data points across a wide range of payment mechanisms, be it for the number of Apple Pay payment users, the number of Samsung Pay on a given market, which when you gradually enables you to build up a detailed picture of the marketplace. And it's this, essentially what it boils down to is a bottom-up linear methodology, sanity checked against a top-down approach. Now, just one other thing, I'd just like to pick up on something that Jason was saying on the development of the US market. Just a little digression here. I was very disappointed that Jason didn't actually mention the first mobile payment mechanism, which was the mobile network operators, who collectively decided that the best name for it would be ISIS. Yeah. And then belatedly changed the brand name. You know, the irony there being that there were two ISISes at the same time, and only the terrorist branch put out an annual report. But there you go.
More exposure.
Quite. Any questions? Just stick your hand up. We'll bring a microphone. Can I maybe tackle one of the major things we talked about in the last panel, which is the development of what's become known as pin-on COTS or pin-on software or pin-on mobile. They haven't really established what they're going to call it yet. But the merger, essentially, of the payment terminal and the till on some kind of Android terminal, when's it going to happen? James, I'll start with you.
Well, in terms of this merger you dictate, in terms of, let's say, software and hardware together, we at SumUp, there are a number of different ways you can look at this, right? So you've got something like pin on glass. We've heard about one of my direct competitors is a big fan of it, has been driving its adoption in Europe. Pin on glass specifically, we're a little bit confused for a number of reasons, really. It's essentially PCI compliance requires you still to have two devices, i.e. a mobile device and a payments device. Number two is removing a screen and ping pad from a payments device doesn't really lower the cost. If you're looking up to $4, it's relatively negligible. And thirdly, it's in terms of merchant experience, handing over, or consumer experience, handing over a mobile device to a consumer to add their PIN in, we're not a big fan of. But then you mentioned other concepts, so something like maybe then tap on phone, the idea of using the NFC antenna of a mobile device. This, now, it's interesting, definitely. Right now, in terms of where it's at, we're only facilitating up to the NFC limit. Before then, you're engaging in an e-commerce transaction. Again, for me, that kills the user experience. It kills the whole experience. If, for example, on that basis, then we can see the breaking of that threshold, I think it's somewhat we're really interested to see where this goes. It won't restrict it to such limited verticals and small value transactions. Nonetheless, from our perspective, I think, you know, combining the whole experience into one seamless product absolutely makes sense. You know, one of the latest things we did was listening to our merchant base and saying, you know, of those 1 million active businesses, what do you want?
and we released in November a SIM-enabled payments device, which is now also across the world, to have one handheld rather than having a combination of a Bluetooth device and a mobile device. So I think the way in which this market needs to go and will go is having a single device, and exactly which format we're going to see it, I think I'm sure we're all watching very closely.
I think it's, the only thing I would add is, we're a little different in the US market in that we took the bold step in 2018 of eliminating the signature requirement. That's how technology advanced we are.
Still have it in Germany. I happened to yesterday.
I know. But we did it finally. And that opens the way for, and this is one of the reasons that PCI deployed the PIN on glass standard, recognizing that finally moving away from signature, a nice 40-year-old technology for identifying who you are, it may require other technology solutions, and everyone's going to deploy their own solutions. Merchants need the flexibility, as you noted, to decide how many devices they want to deploy, and a lot of consumers, aren't used to using PINs in the U.S., and one of the biggest obstacles to PINs in the U.S. is that about 2/3 of merchants in the U.S. do not have a customer-facing PIN pad. They just don't have it. We don't have a pay-at-the-table ecosystem in the U.S., for example, at restaurants, which is ubiquitously deployed here. But you go to a restaurant in the U.S., there's nowhere you can pay at the table. Again, so no ability to enter a PIN. So I think market by market, I think, as you said, there'll be different implementations of technology depending on what kind of legacy ecosystem is in place.
Alex.
I want to add to this because it will 100% happen. The device, like the notion of a second device just to take payment will go away. It's just a matter of when, right? Because I think that the holy grail for all of us is to take our own mobile device phone and tap to some tablet, terminal, whatever, and that's it, right? Like we all want that, and definitely in the U.S. it's heading that way, and perhaps by being last, they get to kind of leapfrog the solution. But we've seen this, and we do this all the time. I'll take my listening to everyone talk, one of the problems with PIN on glass is I certainly would trust, if someone hands me a terminal that says Chase or Ingenico or Verifone or SumUp, I will trust it to put in my PIN. But if someone hands me some no-name terminal tablet at a small restaurant, how comfortable will I be putting in my PIN on glass? Right? Like it's a psychological thing. Agreed, the younger generation is better at doing that, but there's nothing that makes you more comfortable than my own phone by authenticating me, whatever. And so whether they continue to slowly raise the limit of $100 right now in the U.S. and Canada for contactless, like Square has no limit, right? Square, you can tap any amount you want, and that's on the acquirer side. So I think it'll slowly turn into that, but it's 100% going to happen. And if there was a gentleman earlier that said they require two-stage authentication, first, I don't think that's maybe it's a great idea because in the States they're freaking out over 2.5 seconds waiting for, chip or PIN authentication. But if I tap my phone and I'm required by legislation to have two authentication, I will 100% only do it on a phone because then I'll be able to go, yeah, that's me, and authenticate, and there's my two-stage. Just like right now, if I buy from the Apple Store or from the Google Store, it sends me saying, is this you? Confirm, yes. And I'm done, right?
But isn't it, sorry, I was just going to say, isn't it a cultural thing? You were mentioning about how comfortable people feel, and I'll just go back to the Chinese example with all you have literally is the merchant smartphone, and it's now 1 in 3 payments are made in that way by and in cities, around 50% are made that way. So there is clearly a willingness to accept a particular level of risk by the trade-off against the convenience.
But it's my own device. That's the commonality in both of them. I totally agree that convenience outweighs. Humans are lazy, right?
Oh, yeah.
They want convenience above security, right?
They do, but they also have been trained by their banks in Europe never to disclose your PIN.
Agreed.
You can do whatever you like online, and you're covered. You can be as reckless as you like online, and the bank will cover you with a chargeback or whatever. But if we think you've given your PIN to somebody you shouldn't do, you're in trouble. And actually, that's. I agree with you. I'm not putting my PIN into some market trader's telephone. It's not going to happen. Tap it, whatever, fine. Anyway, we have a question in the audience here. If you just say your name and where you're from.
Okay, Nicholas Adolf from an association, EPSM, of payment providers. I think that's a very interesting discussion on the PIN on glass in the trust. And another question more concerning, let's say, the picture of the IKEA store in Sweden and the competition between in mobile payments between card payments and I call it non-card payments like WeChat Pay or something. What do you think will this be by each market individual, like in Sweden different, in China and in the US, and will it be mainly cost driven? Let's say if you take all the fees by the card schemes and perhaps Swish is cheaper for the merchant.
It's a good question because the card schemes are universal, but the credit transfers wrapped around PSD2 or whatever are actually going to be quite local, at least initially. So, where are we on this interoperability against really specialists for a particular market?
It's a good question, but I think there is different drivers for different merchants. You have the micro and the nano. They are very cost conscious. They don't want to have the card terminal because it costs them money. But for bigger merchants like IKEA, they are experimenting and see what actually can we do here. And definitely, it's definitely looking into the cost side of that. Swish in Sweden is far cheaper than card payments, at least some of them, yeah. So I think it's different drivers for different merchants, but and I totally agree with what you said earlier. This will happen over time, and it's a conservative industry. It will take a long time, but the change is going rapidly now. Yeah.
So, I mean, James, you're very card-based, I think, aren't you?
We are, yeah. No, so essentially providing hardware that facilitates card scheme acceptance, for sure. Nonetheless, I mean, think to your point, looking at whether it's going to be a fragmented domestic setup of the Swish, the mobile pay, versus a region-wide, I mean, still to be determined. I think the market is asking for a region-wide SEPA-based transaction due to, let's say, security, time to capture, and time to settle, given it's that much faster. The question for me now is really, I think, on a lot of people's minds, is how do we interface with that? You know, whether that's via a wallet scenario, whether that is via any combination of ways. So for us at SumUp, I think, although our core of business is card acceptance, with what we're expanding in terms of the e-commerce space, we have been going down the route of alternative payment methods for sure. Because on a local market basis, especially for the meantime, in the short to medium term, this is something that is a must for our merchants. On allowing them to do online payment acceptance, we have to facilitate local-based payment methods. So for us in the short term, yes, it's going to be on a domestic basis, but I'm interested to see on a region-wide basis how we would then interact with essentially SEPA at the core.
And it's also, for merchants, it's also a question of what their customers want to use, right? I mean, I mentioned that a lot of merchants in the US in tourist areas like New York, San Francisco, Los Angeles are implementing WeChat Pay and Alipay because Chinese tourists are coming in and want to use those methods of payment. Chinese tourists are coming from China, which does not allow Visa and MasterCard to issue cards. So Chinese tourists are not showing up at stores in the US looking to use their Visa or MasterCard because they don't have them. And that's why merchants need to accept other forms of payment because they want to serve the Chinese tourists. So I think it's also always important certainly for payments providers to ask their merchants, what are your customers showing up looking to pay with? Because that's going to drive a lot of decisions.
Jason, if Alipay, which is it's a hugely profitable, very wealthy organization, decide to want to enter the US market, not just serve Chinese tourists, but actually we're going to sell a payment ecosystem to Americans, and here's a $100 million advertising campaign behind it. Do you think there's a gap in the market for that?
So they tried to do that by buying MoneyGram in the U.S., and that deal was blocked. So that was the answer to that. I think the challenge is for U.S. consumers, and this may not be the truth everywhere, but it's certainly true in the U.S., US consumers are very driven to use credit cards because of rewards that they get for using those cards. It's just a market reality. Consumers want their airline miles, their hotel points. They like the value they get from not having to pay for rental insurance when they rent a car. The benefits package that go with credit cards is enormously valuable to consumers, and that's why credit cards continue to show growth in the US year over year. Alipay doesn't offer something like that. There are no concomitant rewards. So you would say the cost of acceptance is cheaper for merchants because they don't have to fund those rewards programs. So that would be a challenge in the US market. But again, Alipay did try that by buying MoneyGram. That was their pathway into the US market beyond serving Chinese tourists.
What about the Chinese immigrant community as well, though? The immigrant workers, because you've also got, I mean, to my mind, clearly within the Chinese market, Alipay and WeChat Pay, or Weixin Pay as it is over there, it's effectively saturated. So they're both looking at international expansion, which is why they went down the MTO route. But you've really also got this opportunity of initially going down the tourist market, which I think globally is worth about 260 billion, and there's a huge market in the US. And then above and beyond that, you've got significant numbers of Chinese immigrant workers. And to my mind, they're almost like the second tier before you then go for the wider community. You would hope that they would then become accustomed to using that, and then word would presumably spread virally, and then they could go down the wider community route.
I totally agree with that, and that's why they wanted to buy MoneyGram, because the remittances market for sending money back home to China was something that they hoped to take advantage of. Absolutely.
But back in Europe, there have been any number of attempts to build QR-based wallet propositions. I mean, Blue Code's probably the closest we've got to one that's maybe beginning to move. But isn't the issue that actually Alipay is on the edge of an ecosystem, and actually what the consumers want is the ecosystem, and there's just like a lot of really interesting things to do in that app, which aren't about paying for things, but you can pay for things at the end of it. Aren't we getting this the wrong way around? We're talking about payments when actually there's a user experience needs to be created.
Well, we just said it earlier with Starbucks being the most popular payment method, right? Like it's not that the Americans consumer or Canadian consumer aren't used to paying with QR codes. They are, right? But everyone just has a different competing technology. Like Apple Pay could quite as easily exist with a QR code. It doesn't have to exist with NFC. It clearly works, right? It's just consumer behavior. And Chase Pay launched with a QR code payment system. It's not a technological, I think, fight. It's a behavioral. Just what do people gravitate towards? Because my daughter's 7. It's for the younger generation. My daughter's 17. Not only has she never walked into a bank branch in her life, she's never hardly takes out cash. She pays everything with her phone and Apple Pay, and that's it.
So the last question I asked, because I was struck. I'm very impressed you managed to get Apple Pay to come and speak at your conference, because I know how hard they are to get to speak at conferences. Apple Pay was launched some years ago, and it still does the one thing it was launched for. When are Apple going to do something more interesting with Apple Pay? Has anyone got any ideas or suggestions?
Lots of suggestions, but Apple doesn't listen.
It's super interesting, but the industry is so conservative. So in Sweden, for example, there's only 1 or maybe 2 banks now allowing Apple Pay. But the big revolution is when you have in-app purchase and you do online, and you increase the conversion rate radically. So I think the Apple Pay is even more interesting when you shop online or in-app than in store. Yeah.
Well, Alex, what are your great ideas for Apple Pay?
I met the head of Apple Pay quite some years ago, and I said I don't understand why I can't just tap my phone to the iPad. It's got an NFC reader, right? Why can't you enable reader mode in it, and I can just do it? And then having the biometric authentication may not need a 2-factor authentication, because I'm inherently providing 2 factors on the spot. My location, my phone, my identification, everything is in one seamless transaction. But Apple likes to listen, but move slowly in these cases, right? I think they're trying to figure out ways to monetize the whole thing first.
I've got to say, I'm amazed at the really slow pace that loyalty has gone on in terms of Apple Pay. With the remember they used to have the Passbook wallet, which was their old little storage for coupons, and then now you can have that. But in terms of how people have not used NFC for couponing, it just is jaw-dropping. That the original concept was that you'd have this whole payment ecosystem with a sort of loyalty wraparound, so that you would get so much data from someone wandering past a store, ultimately to repeat purchases, all based around NFC and including loyalty, and that never really took off, despite it being a potentially very attractive technology for it.
Sure, Apple could go into any number of things, right? In terms of loyalty, or they could issue their own cards and make on the interchange. But then I think this actually brings up a more interesting topic: is where do you see the likes of essentially typical, let's say, even social media platforms going down that path of actually supporting payments? Whether you would see the likes of a Facebook tomorrow to become a payment initiation service provider, and under PSD2 they can. So what stops them from getting into payments specifically? And even highlighted with you, Alex, you jumped into going down that route of PayFac. So there's nothing stopping a lot of people from jumping further down that path and branching out into financial services.
Absolutely not. I say this every day. Apple could become the largest bank in the world tomorrow if they just allowed us to send money from our iTunes accounts to each other across the world. Never mind and they're taking those steps. And I think the problem with loyalty is there isn't a problem with loyalty, but it does away with anonymity, right? Because I inherently have to track you to give you points, and they're facing already problems with tracking my location and phone and turning it off. So I don't think they lack the ability to turn on loyalty. 100% they have it. But then you have all these privacy groups screaming and kicking, saying you're tracking what I'm doing. But that is inherently the job of a loyalty program, to track your behavior.
It's also all in the T's and C's, isn't it?
I think it's not a technological problem. It's how will consumers react, knowing that Apple is tracking me. Like, I'm surprised the bank wallet, of all the wallet technologies out there now, banks have come out with their own wallets and things like that. But I say this all the time. The last person I'm worried about stealing my money is the bank, because they already have my money, right? But so if I'm going to be paranoid about anyone, that's the last person I should be paranoid about. So you think that the bank's wallet would be the most preferred wallet to use, and they're just not doing a good job of getting them out there.
So I think I have one last question. Yep.
Oh, yes. We've talked about Apple Pay and other payment methods, but it still relies on getting your credit card, your debit card, scanning it, or using those details. When are we actually going to be using things different from credit debit cards to actually initiate Apple Pay? In the UK, Barclays launched Ping It a number of years ago, and the other banks have got PayM. Great for consumer to consumer, but there's no consumer to business side as far as I'm aware of at this moment in time. But
so Dave Birch this morning talked about this forthcoming Cardmageddon, when a third of card volume in Europe hops off to credit transfers of some kind. I think it's going to be different in each different markets. It's going to be very different in the UK to Spain to Germany to Poland, whatever. But we've got to close, but we'll go quick round the table of, do you think Dave Birch is right that a third of card payments in Europe will disappear and become bank transfers instead? I'll start with Winston.
I think if it will, it's going to be a long way coming. I don't think we're going to have, there's other Armageddons before Cardmageddon, put it that way. Particularly if you look at how wedded consumers still are to paying, with cards online and in store, and particularly still in store. I really don't see it in the short or even medium term. Now, what I would also say in terms of the contactless side, because the cards put so much effort in Europe on that, the market was seeded by the cards. It's very difficult for other players like the mobile companies to come in and beat that, because it's so convenient. People are accustomed to it, unless and until they get round to more converged approaches where you become the de facto payment mechanism for online and offline, and throw some loyalty schemes in. At the end of the day, why should I stop using my card on a regular basis?
Point. Mathias, Cardmageddon?
Using the physical card to pay in store, I hope that will disappear within 5 years, but most probably you push it to a mobile wallet and you still have the card, but you have it in the mobile wallet like Alipay or PayPal or Klarna or whatever. So hopefully that is the direction that we're driving it to.
I think cards will always remain, or not always, well, for many, many years to come, remain dominant. I do think, nonetheless, like you rightly stated, on a more fragmented basis, countries like the UK are more likely to find an agreement within respective banks. But if you look at countries like Germany, the banking infrastructure is so fragmented that it's highly unlikely to find such an agreement based on that bank-to-bank transfer setup in that scenario, depending on how you want to interface it. Nonetheless, I think even that we look at these different Swish, mobile pay, etc. solutions, which maybe if they're not interfacing with the cards, still, for me, one of the best user experiences is still contactless transaction. It's still the fastest, and it's the best user experience, and no one has managed to beat that yet.
Yeah. Our American friends? Do you have a view on
I think they should go away.
Yeah.
And I think they will go away, but it's not. It may not be in the next 5 years. I wish it was. I agree. I still use contactless every day in Canada. I tap my card before I even think of using a mobile transaction. But that's because I still have to carry a wallet, because I still have to carry my ID and things like that. And I think the main reason other wallets have failed is, again, because the one thing Apple and Google did right is they built the wallet into the OS of the phone. So I don't need to even download another. When I set up my iPhone, the third thing I'm asked is to put in my credit card, right? I'm just setting up my phone to make a call, and it literally asks me right away to put in my credit card, right, for future purchases. But if they got together and were able to if they would put their differences aside and standardize on a wallet, right, with my ID and everything else, then I only carry my phone around, cards are gone.
Jason, quickly.
I think what Dave's right about with Cardmageddon is the form factor will change. So we might not be carrying around those physical plastic cards, but the importance of networks will not. So back to the question about Apple. Apple last year launched something called Apple Pay Cash, which is white labeled on the Discover network. It's essentially their peer-to-peer service that they would love you to use to move money around within the Apple wallet. PayPal has figured out how to monetize Venmo, which is their peer-to-peer service that now can be used to pay on 2 million in the U.S., 3 million outside around the world, merchants using your Venmo wallet. So those networks will stay. You still need rails to ride, and those rails need to be safe and secure and reliable. But I think the form factor that we use to pay will change.
Okay, I'd like to thank the panel. It was a terrific conversation, and